So I personally own 36 stocks in my dividend stock portfolio, and I've been investing for over 20 years. I invest for dividends and cash flow, and my YouTube channel is doing really well. I'm getting a lot of subscribers, and I get a lot of questions that are coming my way asking me, hey Ian, can you share with all of us a little bit more about your portfolio? You've talked in the past how you set your portfolio up with core positions, medium positions, and small positions. Can you talk a little bit about that strategy and how it applies to your portfolio? How many core positions do you own? How many medium? How many small? How do you divvy up your asset allocation in your dividend stock portfolio? Well, what you see right here, that is my stock portfolio. I just crunched a bunch of numbers in Excel, and I want to share with all of you a little bit more about my personal dividend stock portfolio in today's video. Hey everyone, welcome. This is Ian Lopuck from ppcian.com. I am so happy to have you here on my channel. This channel is all about investing for passive income and cash flow so that all of us can earn money while we sleep. Now, I spent a lot of time before today's video running some numbers in Excel. I got all of my information into Excel, wanted to run some pivot tables. I started classifying stocks, whether they're core, medium, or small. And I want to share those statistics with you today. I want to share a little bit more about my personal strategy, my personal dividend stock portfolio. Before we get into that, I just want to start with some definitions. So whenever I buy a stock, whenever I have the intention of buying a stock in my personal portfolio, I like to think of it, is it a core position, is it a medium or small position? And not only is it going to be core, medium, or small in the short run, but how do I envision it in the long run? Is it going to be a core position? Is it going to be just fundamental to my success in the long run? Is it going to be a medium-sized position? It plays a nice supporting role. It's an important position, but it's not quite core. Or is it going to be a small ancillary position? I want to own a piece of that company. I want to be in that company, but I never envision it being medium or core. That's how I like to think about things, and I like to think about things at a high level as each stock in my portfolio playing a unique role. Each stock is a member of the team. I don't like to have too many team members. That's why I only have 36 positions, and I don't have the intention of adding too many more positions because it's going to dilute my focus. I am very, very interested in keeping a focused portfolio where each position on the team can play a major role. And when I'm thinking about things at a high level, core, medium, or small, I also think in terms of risk reward. Sometimes there are companies that I want to own in the portfolio. Maybe they carry a little bit more risk, or at least perceived risk based on my analysis, and therefore they make it into the medium or smaller bucket. And so it's not only a function of, hey, I want this to be a small position just because I don't see it as a core position, but sometimes it's just a function of, hey, it's small or medium because it carries a little bit more risk. So let's jump right into the numbers. I own 36 positions, and when you divvy them up by bucket, core positions I have 12 stocks, medium I have 15, and small I have 9. And so you can see that right here, 12 core stocks, 15 medium stocks, and then 9 small stocks. And again, this medium, core, small, it's not only based on current asset allocation, but also on future. It's more actually weighted towards future, how I bucketize my stocks. Because sometimes, for example, something may be small, it may run up a lot, and in dollar terms, it might be the same weighting as a medium position, but I left it in the small bucket because it's my perception of what this stock should play, what role it should play in the long term. Now, what I did next is I started running some pivot tables in Excel, and I started looking, hey, let's look at the dollars. When I look at the dollars and I look at core stocks, how much of the total as a percentage do they represent? My core stocks represent 55% of my portfolio. So you see that here, just over half, 55% are in those 12 core stocks. In terms of medium stocks, it's 33%, so you see it right here. 33% in medium stocks, and then small is just 12%. And so you can quickly see how, for me, it's a game of focus. I like to focus, and I have gone all in on my core positions. And in fact, you already know two of my core positions if you've been watching my videos on PPCE, and two of them are Procter & Gamble and Kimberly-Clark. I'll link in the description below to some videos I've done on those videos, but both of those are in here in the core bucket. And in my opinion, I would be happy to see this grow even bigger. I would have no problem if core represented 60 up to maybe even 70% of my portfolio, because I am all about focus. I'm all about focusing on the stocks that I like the most. And so I was very happy, though, just to run this calculation and see this mix, because I feel good about this mix. And I guess this is a takeaway from today's video. If you have a stock portfolio or you're building a portfolio, just running this type of analysis from time to time, it can help be a sanity check. It can help be a nice exercise just to see, hey, are things as you would expect? Do things check up properly? When I see a chart like this, it totally checks up properly. I'm really happy that the representation in terms of count, in terms of number of stocks, is reasonably similar. So 12 versus 15 versus 9. They're all in similar ranges, so I feel good about that. It's not like core is 20 stocks and then I have one medium, one small. That would be kind of weird. So I feel good that it's kind of even in terms of the count. And then obviously in terms of dollar allocation, I would weight it heavier on core and then medium and then less on small. And so I was happy to see the 55%, the 33, and the 12. So just seeing this in front of me, I hadn't run this analysis for a long time, was a very helpful checkup. So next, one thing not represented here that's very interesting is I took these percentages. So core represents 55% of my stock portfolio value, medium 33, small 12. I took these percentages and then I divided by the number of stocks in each bucket. The average core stock that I own on average is 4.59%. So each core stock, each of those 12 stocks on average in the core bucket are worth 4.59% of the total portfolio value, total portfolio dollar value. Again, this is a sanity check. I felt pretty good about that. That's a good amount to have in any one stock. It's not too high in my opinion, not too low. It's a sizable amount. It allows me to focus, so I felt good about that. The average amount of money I have in a medium stock is 2.21%. So on average, the medium holdings each represent 2.21% of the total. And again, that's in this part of the bucket or part of the pie right here. On the small side, each stock on average is 1.32% of the portfolio. And so I felt good about this. If you've been watching my videos for a while, one thing you might have picked up is I really don't like a messy portfolio. I really don't like small ancillary positions or even medium positions that play a non-existent role on the team. Each stock in the portfolio has to carry its weight. And in my opinion, if a stock on average, like if my average small stock, for example, was below 1% and maybe even down like by 0.5%, these stocks would just have no meaning in the portfolio. So I feel good that each small stock on average is 1.32%, so they have a meaningful piece of the pie. Each medium one is 2.21. That's reasonable. It's pretty good for a medium stock. Maybe it would be nice to see it skew a little higher, but that being said, it's okay given that I own 36 stocks overall. I think it's going to, at a certain point, be impossible to skew it up even further than it is, because it would come at the detriment of either core or small. So I feel good about that. And then core coming in at 4.59% on average allocated to each core stock, I feel good about that. Here's where things get even more interesting. Next, what I did is I just looked at all the stocks. Let's look at my top 3 core stocks. Core stock number 1 represents 8.13% of my portfolio. I like that. I like taking big bets on the companies that I love the most. In fact, this stock, I would be happy if it represented 20% of my portfolio, quite frankly. I'd have no problem with that. And it's one that's an evergreen stock I like to add to pretty consistently. And so anyways, 8.13 is number 1. Number 2, it represents 6.74% of the portfolio. Stock number 3 represents 5.61. So you can see how even within the core bucket, it's interesting that I have prioritized different stocks in the bucket differently based on perceived upside, perceived cash flow in the future and perception of being able to raise the dividends, keep the dividends strong, weather ups and downs of the economy, weather cycles of disruption that may come our way. That's how I like to weight stocks. And I feel good that my number one stock, I'm taking a stance. I'm going in at 8.13%. And looking at the bottom three stocks, let's look in the small bucket now at the stocks number 34, 35, and 36. Stock number 34 is 1.05% of my total. 35, 0.99%. Number 36, 0.92. I felt good about this. Even the smallest position in my portfolio represents 0.92% of the portfolio, almost a whole 1 percentage point. And so again, based on these checks, I don't have stocks in the portfolio that are just wasting space, that are not playing an important role, that are not holding their own. And so I felt good about understanding that my small stocks, on average, each one weighs 0.92% or more, and on average, 1.32% each. One thing that I want to point out here, I get questions on my YouTube channel, why don't I just go with a mutual fund? Why don't I just go with the professionals? One of the challenges that professional money managers face is they cannot do this. In many cases, having 36 stocks is too focused. Certainly having 8.13% in a single stock, in my number one core stock, in many cases, the bylaws of just institutional management, the rules and regulations, the investment prospectus, it just does not allow this. The financial institutions, they just can't do what I'm doing here from the standpoint that it is quote unquote not necessarily fiscally responsible. I can sleep very well at night. I know exactly what I'm doing. I'm doing everything very intentionally, and I feel like I'm definitely not taking on undue risk. I'm investing for cash flow. I buy stocks. I never intend to sell them. The stocks that I own raise their dividends year over year, and they have a track record of doing so. So I sleep really well at night, but it just so happens at the financial institutions, this type of strategy is just so counterintuitive. It is so outside the norm. I mean, even I imagine when you're at work talking to peers, or certainly when I'm talking to my peers, water cooler talk at work, people don't on average understand this strategy. It doesn't make sense to them. It is so different than the norm out there in the financial industry. But anyways, my point is that by taking this strategy, by very much taking these calculated measures to construct a world-class dividend portfolio where each stock plays its own role, I don't have too many stocks. They have a history of raising the dividends. They have very solid financials. They're world-class brands that have been around forever, will continue to be around, and they're companies that love to reward their shareholders. I have found a strategy that tends to beat the S&P 500. It tends to do very well. But that being said, the goal here on my YouTube channel is not necessarily to beat the S&P 500. Going forward, maybe I don't. Maybe it fails every time. The fact of the matter is my portfolio is constructed to drive cash flow, because one day I will have the opportunity to take a early retirement, to live the life of financial freedom, and this is the dividend stock portfolio that will power that. So first and foremost, I'm always focused on ways to drive cash flow, to drive passive income, and each stock in the portfolio pays a dividend, pays an increasing stream of dividends in most cases, and will contribute towards my financial freedom. One thing I want to add today at the end of the video, this is actually a response to a recent comment that I got. I thought this was a really good comment. The cost of living in modern society, especially in the United States, it's very expensive. And a lot of people who are just getting started out with dividend investing are asking like, hey, there's almost this elephant in the room. Is it even possible to fully achieve financial freedom? Well, I kind of look at this two ways. My lifestyle is kind of expensive. I have a family to support. We live in the greater San Francisco Bay Area. The cost of living is really high. And so the way I approach this is full financial freedom is a very noble and amazing goal. But the fact of the matter is it's not an either or. It's a continuum. And what I love about dividend investing and building these portfolios like this is the fact that one can achieve partial financial freedom. For example, what if one works really hard on their portfolio and eventually it ends up replicating half of their income? Well, what this means is the person now has a lot of flexibility. Maybe they can take a different job that is less stressful and work less hours. Maybe it's a part-time job. Maybe one can just keep their job and sleep better at night knowing, hey, if they get laid off or something happens, they've got half their paycheck covered, and even if it takes a while to find a new job, they're going to be good. Or even if they find a new job that pays less money, they're going to be really good. And so it's really a continuum, in my opinion. And so I can't speak for anyone's situation other than my own, but I know achieving full financial freedom, it will happen one day, because that's my goal. And when I set my goal myself towards a goal, I'm going to achieve it. It will take some time. And but the fact of the matter is I don't look at it either or. For me, even right now during the journey, it's really exciting because I kind of look at it this way. Each month of living expenses I can earn passively through passive income is a step in the right direction. And it's this fluid continuum towards full financial freedom. And in the day, honestly, that one gets started in dividend growth investing, they're already chipping away towards partial financial freedom. And partial financial freedom, maybe it's only 25% of one's salary. If one can earn passively through dividend stocks 25% of one's salary, it gives some flexibility in life. It frees up some of that stress. It frees up some of that concern. It lets someone have more options ahead of them than when they're 100% dependent on active income, which is income that one earns through salary, through consulting, through paychecks, and replicates it with some passive income through dividend investing. So, thank you for that question. This was a fun video. I really have been receiving this question a lot. I know I talk about my core positions, my medium, my small positions. I talk about them a lot, and I've been receiving these questions. Ian, how have you structured all of this? Now you guys know. Thank you for that question, whoever asked that one, or the multiple people that asked that one. That was a good one. Before I leave today, just a heads up, I'm now on Instagram. If you want to connect with me on Instagram, I'm literally checking that on my phone throughout the day. You want a quick response, you want to engage with me pretty quickly, that's a great way to reach me. I'm going to link to it in the description below. Also, I want to let you know that I truly appreciate all the comments here. The comments drive the videos, and so if you want something covered in a future PPC video, please go ahead and ask it in the comments below or on Instagram. And also, if you want to thank me for this video and for the other videos on my channel, please subscribe to my channel. I would greatly appreciate that. And one thing I learned recently is when one subscribes, there's this little bell next to the subscription button. Try to check that as well, because that will make sure that you are always updated when a new video comes out. When you just subscribe, you may not get the reminder every time, but when you check the bell, the reminder goes out every time that a new dividend investing video is published. Before I leave today, in terms of full disclosure, I own Procter & Gamble, Kimberly-Clark in my personal stock portfolio. I also own Southern Corporation and Realty Income. And so the ticker symbols on these are PG, KMB, SO, and O. Procter & Gamble and Kimberly-Clark, they're two of my core stocks. Southern Company and Realty Income, they're two of my medium stocks. And so I own those stocks in my portfolio. I'm long on them. Also, in terms of a friendly disclaimer, I am not a licensed investment advisor, and today's video is not investment advice. This video is just for your fun and entertainment. If you are going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Thank you so much for watching. I'm wishing you all of the success in the world in your investing and other endeavors out there, and I will see you in the next video.